Welcome to the latest stage analysis video. It's Sunday the 5th of February 2023. Apologise, my voice is a little bit odd still. I've had COVID over the last week, so it's been starting to get over that now a little bit more. But my voice is still cracking up a bit, so I may have to pause a few times during the video. I might even split it up into a few parts. We'll see how it holds up after continuous talking, because it's not something I've been doing for a good few days now. Right, let's begin with the regular content with the major market indexes to start. It's been a very, very eventful week in the markets. We've had multiple stage 2 breakout attempts in individual stocks, as well as some of the major indexes as well. The Russell 2000, the S&P 500, even the Nasdaq with a much lower down within a structure breakout attempt, which could potentially be considered an early attempt at stage 2 as well. So we'll start with the S&P 500 here. You can see obviously the move up through the near-term pivot on above the 200-day moving average on Wednesday there. So one of the things we do in stage analysis, it's kind of a rough guide to the breakout level, is that you want to look for the nearest significant pivot above the 200-day moving average. So once you get one, or at least one, and ideally more above the 200-day moving average, so as your first pivot, your second, we had a third. So we've actually had 3 pivots above the 200-day moving average in the near term. This becomes a significant level. We're above the 200-day moving average. We're coming out of, obviously, our broader stage 1 structure that we've been in for a while now. So this is our potential attempt to move out into stage 2. It can be as simple as that. You don't necessarily have to break all of the highs within the bigger structure. So if we go to a weekly chart on this, you can see we've got obviously a bigger structure. If you go back all the way back to the August highs there, which on an equal weighted basis we have actually broken above. But in the near term, we've got this near term pivot here again above the 30-week moving average, which has been tested a few times there, and then we got this breakout on the weekly chart. Didn't close the week very strongly low Friday, had a big pullback day, so it didn't close the week as a really, really strong stage 2 breakout, but doesn't necessarily have to. It's all about the individual stocks at the end of the day, not what the indexes are doing. So we did see numerous stage 2 breakouts across the board in individual stocks, and we have been for the last couple of months now, which have been highlighting in the watch lists as it's developed through stage 1 and stage 2. We've got many groups already moving into stage 2 for a long time now. For example, home construction, one of the top 5 at the moment, I think it's 4th this week, has been in stage 2 now for at least 2 months. So, which again highlighted a while ago, and has now obviously faded off of the watch list a little bit as it's now much more extended. So, but obviously areas like that have been coming up quite a lot. So we're now starting to see the indexes, which tend to lag, starting to catch up with what's been going on in the individual stocks, and some of the large caps moving this week. We've got Apple, Microsoft and Google popping up in the watch list again for the first time in a little while now in the watch list this weekend, as they start to develop in stage 1 and back towards the top of base structures. And so on watch, they could potentially break out into stage 2 themselves if they start making some continuation breakout attempts in the near term. So we'll see how they develop. But obviously the large caps of the mega caps particularly have been holding back these major indexes. If we look at this on an equal weighted basis, as I've showed before, it's broken out into stage 2. We're actually above the August high on the S&P 500 equal weighted basis. You can see percentage of stocks above their 200-day moving averages at 73.2% in the S&P 500. We go back to the 20-day, still at 67.8% above their 20-day moving average. So short-term, medium and the long-term, all on positive kind of signals, above 2/3 of their stocks above their key moving averages. So back to the S&P 500 here, you can see it did pop up on Thursday, touched up towards the plus 3 ATR level within the broader resistance zone. So this is the zone that's been tested multiple times. So it is making a stage 2 attempt, as I said, but starting to pull back a little bit in on Friday. We had a minus 1.04% day, did hold above the near-term pivot low. So we're in, obviously, the backup range at the moment. Move on to the Nasdaq Composite here. You can see similar kind of moves. Relative strength in the near term since the start of the year has been outperforming the S&P 500 here. So you can see we've had a really strong move in the Nasdaq. You can see the relative strength is starting to be coming back to life again. Still underneath the zero line in terms of which is the 52-week moving average. On a daily chart here, it's the 252-day average. So there's 252, 253 days in an average trading year. So it's a proxy for the 52-week line. It's pretty similar, so it's good enough for a daily chart there. You can see we actually have broken above near-term pivot above the 200-day moving average in the Nasdaq Composite here. So whether this one or within that gap move there, we've broken through a few little levels here. Still underneath, obviously, older resistance back from the August period and within the broader base structure. If we look at it on a weekly basis here, you can see that the downtrend channel now has been broken. We started to break these near-term pivots. We're above a rising 30-week moving average here. 10 weeks still below the 30-week moving average low, but you can see this percentage of stocks above their 200-day moving average in the Nasdaq Composite, which has got 4,000 plus stocks in it, has been gradually making higher lows and been drifting up all the way since back in June. So we've seen this through the watchlist scans with stocks continuously moving through. We started to develop through stage one bases and started breaking out into stage two, and we've seen more and more of that. And now there's over 50% of stocks here now above the 200-day moving average in the Nasdaq Composite. So it's a big market there. You see that obviously the divergence versus what was going on in the individual price action. So we saw a new low here back at the October period here, but it was actually making a higher low in the percentage of stocks above the 200-day moving average. And then again, continued to make higher lows. It just started to turn in the actual index itself. But this is where the market breadth data is much more of a leading indicator, and which is why we focus on it so heavily in the stage analysis method, as it's much more useful than looking at the index charts. So obviously I will go through the market breadth data a little bit later in the video in much more detail. So as you can see at the moment, as I said, Nasdaq Composite potentially with an early stage 2 breakout, but it is got one of the areas with heavy resistance. It's still within a broader structure as such, getting back towards the top of that range. So it'd be good to see it consolidate in a sideways range for a little bit here, tighten up a little bit before attempting to make a further breakout attempt. It's obviously a quicker move than that would get things quite extended in the near term, and obviously open to hitting some major resistance levels as well. So it'd be good to see some consolidation in the near term. The equal weighted Nasdaq 100 is also interesting. Broke out into potential stage 2 weeks ago now. Did squat again this week like we saw with the Nasdaq Composite there and the other indexes after testing the August high. So again, want to see exactly the same thing. Want to see this consolidate, form a backup range. So in stage analysis, we have a secondary entry point after the initial stage 2A breakout point. We have a secondary entry point, which is on the backup towards the breakout level. Doesn't always come. Sometimes you just get a continuous breakout. But if you do get a backup range formed, then the reversal back from wherever this lands, whether it's higher, whether it's lower, whether it's a smaller pullback, is where we look for the secondary entry zone to form. So at the moment, this is attempting to move into early stage 2 as well. Russell 2000 also highlighted this earlier in the week with the stage 2 breakout attempt there on Tuesday. So followed through on Wednesday strongly, continued on Thursday and Friday to hold up there. So good week for the Russell 2000 there, back again up near those August highs, testing that through its major resistance level that made up the stage 2 level, which you can see was tested numerous times throughout the course of the last year. So that was why that became the most significant level, and that's why we watch that for the potential stage 2 breakout attempt. If we look at this on a weekly basis, you can see it's very clear. Obviously breaking through this major resistance zone here into early stage 2, and relative strength versus the S&P 500 also outperforming. So we've got a potential early stage 2 breakout attempt. Again, it's moving into resistance still. So if it does back up, we'll be looking for that secondary entry zone on the pullback, which obviously will potentially give good opportunity for individual stocks or on a continuation breakout attempt, a little bit of VCP maybe as it starts to move up. Right, moving on. Dollar index had a big reversal on Friday. So one of the reasons stocks actually pulled back quite heavily was the dollar. We've seen obviously this weakening significantly, moving into stage 4 of late. So it had a first big reversal in stage 4, basically back towards the declining 10-week moving average here. We've got obviously the old breakdown level through here, the range where it resistance back up in the 104 to 105 kind of zone. So if this does actually manage to rally back up into there, then potentially that would become the secondary entry zone on the short side there for the dollar index in stage 4. So we could obviously be temporarily under pressure with individual stocks, and especially gold, silver, copper, etc. So if we look at gold here, you can see massive reversal on Friday there, came back in. So on a 1 week bar, actually pulled back in. We're still on a stage analysis technical attribute score of a 7. So it's still in early stage 2 and in the backup. So it's been in stage 2 for a little while now. Obviously breaking out through here is your stage 2 week. So back into the backup range, but that is a big reversal. So you want to see that calm down. You want to see smaller bars tightening up and then potentially starting to reverse back out again. Back up and out, and again that would be your potential backup range in there if it did. Silver coming off more heavily as you would expect than gold, so much more volatile than gold, a bit more of a leveraged play in the precious metal space, so you tend to see it react more violently. So came off really hard there on Friday. The SATA scores dropped back down to a 5, so back in the mid zone. Again, still in early stage 2, still hasn't undercut the stage 2 breakout level as yet, but obviously it could. Again, we want to see it hold that breakout level. We want to see some kind of reversal. If it does undercut, we want to see that undercut to be quickly rejected. So oil, just going through there, reversing down in stage 4 here. So you can see the stage 4 move continuing to develop here. We've got obviously multiple breakdowns here. You can see these breakdowns through there from the original base structure at the top there. So moving down in stage 4, continuing lower. So looking for a continuation breakdown, and this is starting to develop into the individual stocks as well. Now we've seen there was a 10% underperformance in the exploration and production group, for example, this week over the S&P 500. So as the XLE, for example, starting to show more signs of faltering in stage 3, and XOP, I think is there's one of the ETFs for that, also showing signs of faltering there. So potential for a stage 4 breakdown in the actual individual stocks as well. If we go to copper, just here quickly, you can see still holding in stage 2, but again, big pullback based on what the dollar is doing there. It's down to a stage analysis technical attribute score of a 6 at the moment in early stage 2 still. So watching again for a backup type move. Quickly look at the indexes on a weekly basis with their SATA scores. The S&P 500 on 8. Problem with the S&P 500 SATA score is that one of the indicators is obviously based on the Mansfield relative strength, which is versus the S&P 500, so it's versus itself. So actually, in one of these the score for the S&P 500 futures has got one SATA score different than everything else. So, but an 8 nonetheless means it's on a very strong score there. So Nasdaq 100 also on an 8. So as I said, you can see the green line starting to creep in here. Potential stage 2 breakout attempt within the broader base structure. So you can see this broader stage 1 structure. So moving into potential early stage 2, you can see the change in SATA score here, the highest it's been since all the way back in late 2021. So Dow Jones still consolidating around the top of the structure here, potentially already in early stage 2 since the move here to the top of the range, but still consolidating at the moment. So looking for a move up and out through there. Russell 2000 also on an 8. You can see the clear stage 2 move over the last week, but potentially did actually break out the week before that. So you can see that obviously again structure that's been forming for a while here. So it's starting to move out more convincingly there, but still got lots and lots of overhead resistance to work through, even if it does. All right, and then Euro stocks continuing higher. The European stocks continue to outperform in early stage 2 here, with further continuation breakouts to new highs.